Hey guys, hi Bryson here, and today I'm going to tell you 7 things you should never do when it comes to finance. And by the way, very early on, I found that basically when it comes to making a lot of money and keeping it, it's a mix of asking the right questions and asking those questions to the right people and knowing the questions to actually ask those people, because if you don't, you will be taken advantage of, and before you know it, you'll be broke. And I'll tell you why in this video right here. And by the way, although I said 7, I might include a few extra ones. We'll see. Stick around to the end of the video to find out. But if you're new here, guys, I post videos every single day on YouTube, so make sure to also subscribe and hit the bell so you're notified. And on top of that, also destroy the like button for the YouTube algorithm. Now, the very first thing you should never do when it comes to finance and money is you should never invest your money with a bank. And here's why, okay? Although it's a great idea to grab your cash money and put it in a bank to have FDIC insurance, that way if anything happens, you're good to go. The idea is that it is not a good idea to basically go out there, grab your money, and start investing into stocks, mutual funds, and also index funds when it comes to your bank. For example, Chase and TD Bank are now offering investment platforms when it comes to their users, okay? If you want to invest with us, come ahead and come invest with us. But the answer is that there is a problem. Usually, when you invest with the banks, you usually have extra fees. For example, a management fee right now with Chase around 0.35%, which is going to add to a lot of money in the future. On top of that, usually they have a limited amount of investment options out there, so you don't have all the options you actually want to invest into. On top of that, currently right now, as the date of this video right here, they don't offer any fractional shares. Usually, you're going to have to require the full amount of money to go out there and buy a full share of an investment instead of just buying a piece of it, for example, with M1 Finance, Acorns, and even Robinhood right now, which means you're going to be more limited. And on top of that, some of them even till this day still have fees when it comes to trading. So usually, although banks are great for banking and getting good loans and getting good rates and also car loans, all that stuff, awesome, great, it does not mean they're good when it comes to investing. And usually the funds they offer, they also have something to gain by you investing in those funds too. So be very careful when it comes to, hey, I'm going to invest with my bank because it's a lot more simple. In reality, it does not mean it's the best option. And by the way, here is a crazy story I read on Forbes today. The idea is that this guy was 24 years old, went into a bank and said, hey, I want to invest into a Roth IRA. The banker told him this, okay? They told him, hey, that's not a good idea. You should invest into a CD with us, and we're going to pay you around 1.59%, which is better than what a Roth IRA is actually going to pay you. Now, if you know anything about Roth IRAs or 401ks or Roth 401ks, the answer is that that is a complete lie and also a little BS and also a little, actually a lot of misinformation right there, because basically two different vehicles when it comes to investing. Well, one is investing and one is just keeping your money there in a certified deposit, and that's all you're doing. And by the way, the bank has a lot to gain by locking in your money and having you hold on to it there with their bank, okay? So always consider, okay, although a bank is good with banking, it does not mean they're good when it comes to, hey, investing. Although your mechanic is great when it comes to fixing your car, it does not mean he's very good when it comes to giving you advice on basically how to fix your house, okay? Although the guy that fixes your house is good at that, it does not mean he's good at giving you financial advice, okay? So just keep that in mind. Stick to a professional for what they're good at, but be very careful at buying everything they actually do, okay? Just focus on what do you do best, and I'll invest into that. But that is it, okay? So I only use banks for banking, not for investing. And by the way, I use M1 Finance when it comes to investing. Now, number 2, never ask an insurance agent if you need term life insurance or basically whole life insurance. The answer is insurance agents usually are biased, and if they're not a fiduciary, they're not acting towards you and your best interest. They're acting towards them and their best interest and also the company's best interest. So for example, you might not know this, but term life insurance is usually 10 times cheaper than whole life insurance. And on top of that, insurance agents usually make an 80 to to 100% commission on the first year of all your premiums on that whole life insurance policy. And on top of that, as long as you keep it open and stay alive, they continue to get paid between 15 to 25% for the rest of the life of the policy. So basically, if you're paying $600 every single month, okay, for that whole life insurance, well, every single year, you're going to be paying around, well, let's just do the math here. My phone's loading up here. $600 every month, multiplied by 12. Every year, that's $7,200. But the insurance agent is going to get 25% of that policy every single year, which means you're going to make $1,800. So why wouldn't they want to basically sell you whole life insurance? And by the way, say I get 80 clients to do this. Well, in reality, multiply by 80, that means I'm going to be making $144,000 every single year in passive income, okay? And that's just by selling you whole life insurance. And by the way, term insurance is basically for a certain term. Whole life insurance is for your entire life, and that's why they say, hey, that's why it's more expensive, it's more risk, and also you build up a cash value. And by the way, I also notice that whenever I talk about this, insurance agents comment down below and get very angry with me. So the truth is, I don't really care. I'm sorry. And by the way, guys, if you guys don't know, although, for example, whole life might cost you $600 every single month or even higher, the answer is usually term life is going to be around 10 times less than that. So you might end up $600 with whole life, but term might only be $60 every single month. So what you want to do is basically get a term life insurance for like 30 years, and then just grab the extra money you would put into whole life and invest it into your Roth IRA or into your traditional IRA or into your 401k, whatever you want to do. Just invest that money and have it grow over that 30-year period. And then by the end of that time, you won't need any life insurance, okay? But that way, you are also covered, and that way, the insurance agent and the company are not just making a lot of money off of you by telling you, hey, this is a great idea. No, it's not a great idea, okay? Now, number 3. Never ask a car salesman if you need a new car or a used car. Usually, you're going to get an answer like this. Hey, no, used cars are cool, but in reality, the only problem is basically they're not that reliable. And also, if it's new, it's only you and only you use it. Isn't that awesome? In reality, I don't know why I said that accent and stuff like that, but in reality, the truth is that car salesmen make an average around 25% commission on the gross profit. On top of that, whenever they sell you on the back end with like financing through the whole like dealership, they also make between 15% to 5% on that also. So they also have a lot to gain by A, selling you a new car, more money, B, also giving you financing, and C, also selling you, hey, extended warranty. Hey, buy this package here, okay? We're gonna make money by doing that also. But in reality, you can just go out there and buy a certified used car between 3 to 5 years old and still have a lot of value and still ride it for an additional maybe 5 to 10 years and still be fine. You don't need to buy a new car, and you don't need to ask the person that's going to make a ton of money, hey, should I buy a new car? The answer is gonna be like, hey, yeah, you should. No, don't go there until you know exactly what you're going to buy, and usually get financing outside of the dealership, and that way you go inside saying, hey, I already have financing, now I just need this car. But usually I recommend, hey, just buy a used car for cash. Boom, you're done with it. No payments whatsoever. Now, number 4, you never want to ask a bank, hey, how much house can I afford? And how much money are you guys going to lend me? And is that a good idea? Usually, if bank is going to lend you more money that you can actually afford, and it's actually beyond your budget, because in reality, they have something called debt to income ratio. And as long as all your debt combined, including your mortgage, is not over 50 to 47% of what your actual income is every single month, they don't mind giving you a big mortgage and a lot of money for buying a house, because in reality, they're going to make a lot of money. And by the way, guys, if you guys don't know this, in the first 5 to 10 years you're making mortgage payments, in reality, you're paying more money towards interest than you are towards capital. So the bank has a lot to gain by giving you extra money to buy a house you love, but you really can't afford. So the rule I follow is this, okay? If a house or a mortgage is going to be more than 33% of my income every single month, in reality, I won't do it. So for example, if I make $5,000 every single month, in reality, I will not spend more than $1,650 every single month on my mortgage. That way, if anything happens, I still have a ton of money on the side to take care of things, okay? That way, I'm not just full of debt and all the way up to here with my mortgage payments, okay? This way, you have a lot of freedom and also a lot of wiggle room. And on top of that, I recommend you put down around 20% on the down payment. That way, you also avoid mortgage insurance. But again, you don't want to ask a person you're going to borrow money from, hey, can you give me more money? That way can give you more money and you make more money also. They're like, yeah, sure, no problem. Just keep paying over the next 30 years and you're good to go. You see what I'm saying there? So just be careful. And the rule is 33% of what your income is every single month, your mortgage should not pass that. And also put around 20% of the down payment. That way you also avoid mortgage insurance. Okay, so just keep that in mind. Now, number 5, guys, never ask a credit card company, hey, is it okay for me to carry a balance and just pay the minimum? The answer is usually going to be 99%, well, 99.99% of the time, hey, yeah, it's fine. Just pay it off slowly. Don't worry, it's only gonna take you around 7 years to pay it off. They don't tell you that part, right? But the other 0.01% tell you, hey, no, that's a bad idea. You're gonna pay a lot of money in interest. Well, usually that 0.01% of people are gonna get fired because basically they're on a recorded line, okay? So the answer is usually the best way to use a credit card is basically whatever amount of money you spend every single month, pay it off in full that same month. That way you avoid any interest by the end of the month. That's the best idea. The way I do this is, okay, I have between 2 to 3 credit cards, okay? And I basically put a small bill in each of them. For example, Netflix, my phone bill, and maybe like my cable bill, okay? Not my cable bill, my internet bill, right? I have all those 3 bills on them and I pay them off in full every single month. That way I get no debt, my credit score goes up, and on top of that, I build up my payment history, but the credit card company is not making any money off of me, okay? So again, do not ask the credit card company, hey, is it okay for me to carry a balance? You're gonna say, yeah, no problem. Carry as long as you like it, okay? We're only gonna make between 24 to 35% interest every single year off of you. So yeah, please do what you just said you wanted to do, okay? Usually, that's what's going to happen. Now, number 6, be careful taking stock advice and investment advice from someone that doesn't really have any experience whatsoever. For example, okay, most of the people I mentioned here were basically like insurance people, bank people. Those people are professionals and they know how to sell you on things and they know what they're talking about, but just know how to do it to make money and then you lose money, right? So the idea is, say for example, I go to my mechanic and he tells me, Tommy, you should buy Tesla stock or you should buy Apple stock. And I say, why? They're like, hey, Apple is going to be around forever. They have the iPhone. Don't you know that? Hey, Tesla is the future. They have a battery in their car. Like, when have you ever seen that, okay? And I'm like, okay, all right. Sounds good. But the answer is usually, guys, if someone cannot give you a concrete reason financially, also, for example, hey, what's the intrinsic value of the company? What's the target price of the company? Hey, what's the PE ratio? Hey, how much debt do they have? Hey, how are they going to do in the future? Hey, how's their competition? Hey, what do they have over their competition that makes them special? If they can't answer all those questions and say, hey, no, it's just Tesla and Apple, they're great forever, the answer is usually that's called speculation. And at all costs, that's usually going to cost you money if the company goes down. So usually, when it comes to investment advice, I listen to 4 people: Benjamin Graham, okay, Warren Buffett, Charlie Munger, and also John C. Bogle. If you don't know those 4 names right there when it comes to investing, those people have a track record or had a track record of 20 to 50 years when it came to successful investments, and what they teach is concrete and they know what they're talking about. But just saying, for example, hey, Tesla is gonna be around forever, oh my God, that's not a good investment strategy. Make sure you know exactly what you're investing into and make sure the person is telling you about it knows exactly what they're also talking about. If they don't, just don't take their advice, okay? And by the way, I recommend if you want to invest but not study companies, just call Vanguard and ask about a target date fund. That way you invest automatically and without having to do any speculation, and just keep investing your money, and over time your money will keep growing. And also Vanguard is going to handle all the management when it comes to your entire fund, okay? So again, ask Vanguard about a target date fund, and that's for retirement and for people that just want to retire and not worry about exactly what they're investing into. And by the way, the fees are super low. Highly recommend those. Now, number 7, and the last one here is basically Never ask a bank if it's a good idea to keep your money with them, because basically they have a high yield savings accounts, or maybe they have maybe a CD that's pretty high at the time. Okay, now if you guys don't know this, whenever you, for example, put this money in a bank, okay, $10,000, okay, the truth is that the bank can grab out of that 10K, they can grab 90% of that money, so in this case 9,000, and go ahead and basically lend that money out. And guess what they can do with that? Make loans and make extra money from your money. So basically, the more money a bank has in deposits, well, the more money can actually go ahead and lend out there, invest, and also make more money from your money. So you get it, for example, a 1% high yield savings rate, or maybe even a 2% high yield savings rate. The answer is that it doesn't matter. And here's why. Because inflation is between 2% to 3%. So every single year, you're still going to be losing money while the bank is grabbing your money and flipping it over and over again and getting rich off of your money. So in reality, if you want to invest your money, a CD and a high yield savings is not an investment, okay? You want to invest your money either into a fund, into index funds or stocks, but to do that, you need knowledge, okay? So make sure to go out there, call Vanguard and ask exactly, hey, what are the offers? What do you guys think about this? And they'll give you a perfect plan. By the way, I'm not affiliated with Vanguard, but they are a great company and very reputable and have a track record of over 30 years, okay? And their investment fees are very, very, very low. And that's why I recommend them a ton. But guys, that has been 7, I think, by this point. And I did tell you I will do a bonus one, so why not give you a bonus here? Well, the bonus is this, okay? Never ask a casino if you should, this is a bad one, okay? But never ask a casino if you should use something else as collateral because basically you ran out of money. For example, hey, I have a house. Hey, I have a car. Let's just use that. The answer is no. Don't ask those people that question, and don't gamble. It's not a good idea. On top of that, okay, never ask a YouTuber if you should buy their course. That's just a joke, but maybe not a joke, okay? And lastly, never ask a bank if it's a good idea to finance a liability. Usually they're gonna say, yeah, sure, pay it off over time. Everything is gonna be fine, okay? But guys, that has been around 10 things you never want to do and never want to ask certain people. Usually the idea is you want to know the answers to these questions before you walk into an office or a bank or a dealership or call an insurance agent. You want to know all this stuff because basically it's human nature to look out for yourself, and also the company look out for the company also. That's what they do. So it's your job to look out for yourself and make sure you're not going to go out there and just hand them all your money and walk away thinking you got a good deal, but in reality, they just scammed you and they're going to make a large commission off of you, okay? So that's what I recommend, guys. If you learned anything here, guys, comment down below and let me know. And also, did I miss something here? What should you also not do when it comes to finance or money or asking questions to people? Comment down below, let me know. I'll see you guys later. Thanks for watching. As always, if you guys are here, well, like this video and top out. Also, subscribe and hit the bell so you're notified. And if you want to talk to me one-on-one or text me, subscribe to my Patreon, link down below. Or for example, send me a DM on Instagram at TinyBryson. And on top of that, if you want to watch a video on basically how much money I invest and how much money my money makes me every single month, watch this video right here. Tomorrow. Thanks for watching. And as always, peace.